Sandeep Singh, CEO of Western Copper and Gold. The Casino Copper Gold project in the Yukon is what I'll be talking to you about. Oh, excuse me, I skipped past it, but there was a disclaimer there. Please be mindful that I'll be making forward-looking statements. So we are a little bit different from many of the things you probably have seen at the conference in the sense that we've already found our deposit. We're not really in the exploration phase. We have a major, globally significant copper gold resource. People use the word world-class quite a bit, but I would suggest globally significant is probably more fair. It's attracted interest from some of the smartest names in the copper space. That includes Rio Tinto, Mitsubishi Materials, and we're pushing it forward. We have a very current feasibility study. We're pushing it through the de-risking phase over the next several years, during which time I think we're going to get a lot of what you've already heard about is that crunch happening. You've already seen copper prices move. We've seen gold prices move. But I think it's going to pale in comparison to the supply crunch that we're going to see when all these various technologies take off, whether it's decarbonization, whether it's just global infrastructure. You've got an entire continent in India that's going to look like it's going to own the next 20 years after China owned the last 20 years. And obviously, Chen talked about the power required to win the AI race. All of those are hugely important for copper. Just quickly on the company, we're dual listed in Toronto and on the New York Stock Exchange under the ticker WRN. We've got roughly a 400 million Canadian market cap right now with 80 some odd million in the bank. We're well funded for the next several years. We have all the money we need to achieve our goals, and recently completed a large financing when I joined. I also became a large shareholder as soon as I joined. I put $3 million of hard money into the company, so in it with investors, which is the only way I want to run these companies. Other than that, on the right-hand side, I mentioned Rio Tinto. They own just below 10%. Mitsubishi at 5%, other very supportive shareholders, but really we're in the phase of broadening out the tent of supporters. Right now we only have a couple research analysts covering us. We're in the process of growing that quite significantly, and as I said, that last fundraising round built starter positions for many more significant names that you don't see on that list, people that I've known in my history that I expect to continue to support the story going forward. So really quickly, I describe these big copper porphyries as needing sometimes a decade or so to kind of find their footing or really progress. And that was the last decade for us. That was the 2010s. There was a lot of significant work done. I'm the beneficiary of that, having just come in recently, but a lot of significant work done during a phase where over that decade, copper went from mid-4s down to mid-2s. In the middle of the decade, we had significant tailings disasters at Mount Poly, at Samarco in Brazil. All of that wasn't exactly favorable for big copper porphyries, but nonetheless, a lot of significant work. And then in the last 3 or 4 years, we're starting to see the benefit of that significant movement. You can imagine during that type of decade, you tend to go slow. There isn't enough capital to do everything you want to do. And in the last, again, as I said, 3 years, that's changed quite significantly. So what has the company done? It's gone from PEA to full feasibility. Over that span, the resource has doubled. As I mentioned, it's attracted some of the best names in the copper business. And now we're trying to take it the next step further in a major de-risking phase. There's just the recap of Rio and Mitsubishi's involvement. Rio Tinto has put in money 5 different times. Every time they've had the opportunity to put money in, they have. And Mitsubishi became a partner just over a year ago. Their rights are fairly benign. They get the right to maintain their stake for the next year if they choose to, and they've so far always chosen to. In terms of mineral endowment, and not that size is the only thing that matters. Clearly, I'll show you in a minute why these tons or pounds and ounces are viable and highly viable. But about 11 billion pounds of copper, 21 million plus ounces of gold. Most of that is in the M&I category. This resource has been drilled significantly and de-risked in doing so. It's about a half copper by metal value, the other third gold, and then silver and moly. I like that mix. If you're a big company looking to build an asset like this, I think the gold offers kind of a natural hedge, but frankly, for the foreseeable future, for the next decade, I think both are going to work significantly in our favor. This is a very interesting slide. I think it kind of tells you with a bit of narration what I saw when I joined and why I'm so excited about the project. There is a heap leach component to this, but that's really the pre-strip has value. You take that instead of mining it and stockpiling it, you throw it on a heap leach. It generated a good return at $1,700 gold. If you use more current pricing, it's fantastic. But the crux of it is that mill reserve, the sulfide project, if you will, 1.2 billion tons at 0.4% copper equivalent. One big pit, very low strip ratio, mostly ore. The strip ratio is 0.43. Very clean metallurgy, closer to sea level in terms of elevation. Tick, 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 tick. Maybe lower grade versus some of the things you see in Latin America in the high Andes, 4,500, 5,000 meter altitude, where you're challenged with water, you're challenged with social issues, you're challenged with power. I much rather be pushing this project forward than a lot of things out there that are getting better traction, trading in some cases 10 times the valuation that we're trading at. So, other thing worth pointing out, that reserve underpins a 27-year mine life, but it's only a third of the overall resource. We have 3.6 billion tons of copper in and around that grade. So when we look at this, when other majors look at this, it's not a 27-year mine life that's getting them excited, although that's quite the start. It's decades beyond that that we have already the resources for. It's open at depth. It's open to the northwest. So this is a very, very long life asset. That's one of the things that happened during that decade of unsupportive copper prices. The other thing that happened is that core zone, you see an awful lot of hot colors in there. That's the starter pit. So within the 1.2 billion tons, there's 430 million tons of 0.6 copper equivalent. The strip is negligible. It's 0.26. You're essentially in ore the entire time, sticking out of the surface. So what does that do? That leads to very quick payback. Despite having a significant capex number for us, one that we wouldn't look to build ourselves, moderate in the copper space, that core zone generates almost $1 billion per annum of after-tax cash flow in the first 4 years. Even at long-term prices of $360 and $1,700 gold, that is a 3-ish year payback. And then you're left with decades, choose your number, but decades of production thereafter. And again, using long-term prices, those decades give you about $500 million of after-tax cash flow per year. The combination of size, longevity, and that very quick payback in a good jurisdiction where you can justify building these types of mines and not risk losing them, that is a very important mix. Just a couple more data points into that core zone. If we drilled these holes today and put them out, we'd have a massive run, 300 meters of 1% copper equivalent right from surface, 66 meters of 2.5. This was drilling that Rio Tinto wanted to see when they came in to justify or to confirm that the core zone does what it's supposed to, which is underpin that very quick payback. Historically, there's a hole almost of 700 meters of 1% copper equivalent that ended in 1% copper equivalent where the hole was lost. So this is pretty meaningful part of the story. I won't bore you with this. Again, I use 360 and 1700 because that's what our 2022 feasibility study was done at. This is done at an 80 cent FX. Sadly, our FX rate is not 80 cents in Canada. If you start updating any of those metrics, not necessarily to spot, but just start moving higher in terms of $4 copper price, slightly higher gold price, adjust for FX, you can get to $4-5 billion of NPV. And again, mathematically, I think that's the wrong way to look at that because nothing after year 10 really hits an NPV calculation and just gets diluted away. But the better way to think of this is almost $1 billion, 951 in that little square after-tax cash flow per year in the first 4 years during your payback, and then $500 million thereafter for a very, very long time. If you adjust from 360 and $1,700 gold, again, those numbers would move up significantly as well. I don't think I have time, except to say that the infrastructure picture, which is an important part of these big copper porphyries, is also improving. We have a federal government that's building the road to our site. It's called the Casino Gold Access Road. It's a road just to casino or nowhere else, so speaks to support. They're building 100% of the first half of the road and then contributing 30% of the next half of the road. You don't see that in very many jurisdictions. The government of the Yukon has also secured access to Skagway. You see at the bottom there. In Alaska, they've secured access for concentrate shipment for the Yukon, which otherwise would be landlocked, through Skagway. That's where historically it's gone to port. We are the primary beneficiaries of that. They've put $21 million aside to do so. So that 10 minutes went by lightning fast. You sure they started at 10 minutes? But hopefully I gave you a flavor for what we have, which, as I said, is very significant. You can chase grade in certain places, and certainly grade in the mining sector matters, but it's a combination of grade, strip, metallurgy, jurisdiction, and I think we have that right mix. So thank you.